Shishir Shrivastava, Joint MD at Phoenix Mills, joining us on the show right now. Shishir, hi, morning. India's retail sector is ready for a strong increase in demand, driven by urbanization, the liberalization of the sector, and of course, strong demographics as well. How do you think you're placed to take advantage of this retail boom?
Good morning. I think you've said it all. We are so confident about, the Indian consumption story. And about 4 years ago, we had set out a plan to double our retail portfolio by 2021, 2022. And we seem to be on track with that. We have 5 new developments under construction. We expect to hit close to about 11 million square feet of gross leasable area in the retail portfolio itself within the next 2 to 2.5 years. But what's very interesting is also, as part of our mixed-use developments, our commercial office portfolio is growing significantly. So today, while we have about 1.8 million GLA in the office portfolio, that is likely to grow up to about 5 million square feet by 23-24. And we also have another huge potential at our marquee Mumbai property, High Street Phoenix, where we have some significant development potential. So that could probably take our commercial office portfolio to by another 1 million square feet.
Hi Shishir, good morning. And now, with multiple SPVs, there's a strong call from the analyst community for you to look at potential monetization of stake via REITs. Are you looking at a REIT listing soon?
Well, we believe that, all our assets are still at the very high growth stage. We are seeing an EBITDA growth, anywhere in the mid to late teens year on year. We believe that the right time for, moving any of these assets into a REIT structure would probably be once once we see stable single-digit growth. So that would be a couple of years from now. However, having said that, we've never shied away from monetizing on any of these assets. And, our platform with the Canada Pension Plan has been an evidence of that, where we diluted at the SPV level, where we had an operating mall, and we raised significant growth capital through that route. So, for us, it's par for the course. We develop assets as they mature. We will always consider what is going to create the most shareholder value, and if monetizing is one of those routes that we choose to undertake, we will go down that path.
Right. Shishir, since you've got your ear to the ground, sales momentum in residential markets is still pretty weak, with low traction seen in the luxury space. What is your own take on the residential markets, and when can we see a meaningful recovery kick in?
Well, we have a very large residential development in Bangalore, and that's about all that we have in our residential portfolio today. And that's not really our core business, but what we have seen is, in the last 2 quarters at Bangalore, we've seen demand increase, we've seen the sales velocity go up, and the pricing seems to be quite stable. So I would say that in certain markets across the country, clearly we are on the recovery cycle, and we're seeing an upswing in the demand.
Okay. Have Kurla and Pune HSP malls seen a robust consumption growth, or are they still lagging what High Street Phoenix in Lower Parel is doing?
Well, I must mention that Phoenix Market City Kurla has really performed very, very well in over the last year. Across the last 3 years, we've seen a consumption growth of about 24% year on year. This year, for the last 9 months, we've seen a consumption growth, a significant consumption growth, as about a 27% growth in EBITDA that's being driven by sales and consumption generated at our center. Phoenix Market City Pune has always been one of our very high performing assets, and it continues to be the leader in that micro market.
And how are your rentals and EBITDA trends panning out in the quarter gone by?
Well, on a consolidated basis, we've seen rental growth in the last 9 months of about 16%, which is a very, very good indication of where the future lies, with consumption only growing every quarter. And our EBITDA growth has also been about 17%. So that's a very positive trend that we've seen. And this is, it's largely pretty much the same across all of our assets.
And are you on track for the completion of the Lucknow Mall in the second half of FY20?
Oh yes, of course. We've progressed significantly on that. We are very excited with the designs. It's looking that it's going to be one of the best designed malls in our portfolio. And FY20 is when we expect to see it operational.
We wish you all the best. Thanks much for taking time out and joining in with a heads up as to how your overall portfolio is looking, your targets as well as the